Hi, welcome to The Desert Life. I'm Renee the Realtor. Thank you so much for joining us. I am super excited about today's episode because we have a special guest. And before I make the introduction of this fabulous person, please be sure to subscribe and hit the notification button so you can stay updated on real estate trends in the Phoenix area. Also, feel free to share this channel with anyone who you may think would benefit from the contents of the video. Also, please remember that new videos are released every Sunday at 1 p.m. Mountain Standard Time. So let's get down to business. Yay. So we have Cerita Edwards from Radiant Financial Group, and I'm so excited to have her with us because she's going to give us some real estate tips. So please introduce yourself.
Well, you already gave me such an incredible introduction. My name is Cerita Edwards. I am a loan advisor with Radiant Financial Group in the Phoenix area, and also I'm licensed in California, and I've been in this industry for 10 years.
Wow, that's a long time. Awesome.
Yeah, long time.
So now you're a loan originator. So for those who may not understand what that is, what exactly do you do, or what is that?
So a loan originator is someone who gets you pre-qualified to finance your dream home. So I'm the person who you would go to if you need financing to buy your house.
Awesome,
yep.
Awesome. So now, we know that in real estate, not a lot of people can afford to pay cash for their home. So a lot of future homeowners or current homeowners seek out mortgages to finance or to purchase their home. So what does it take, or what are the steps to get pre-approved for a mortgage?
So there's two things you can do. There's pre-qualified or getting pre-approved. Pre-qualified is when you I would look at your income and assets and pull your credit and determine if you're credit worthy, if the lender is actually going to give you the loan. Being pre-approved is when you actually take a complete file, tax returns, pay stubs, bank statements, everything that has to do with you as a client, and I submit that entire credit package to a lender. A lender scrubs the package, goes through it completely, and says, yes, I'm gonna give you a loan, I'm gonna approve you, or no, these are some things we need to work on before we can actually extend credit to you.
Okay, so it sounds like the pre-approval is the more of the stringent, it really qualifies you for buying the home or taking out a mortgage to buy the home.
Yeah, and especially now in this market, it's a little stronger to have an actual underwritten conditionally approved. Condition meaning, yes, they're approved. As long as they supply these conditions to the lender, they're good to go.
Awesome,
yeah.
Awesome. So Cerita, I get so many calls from potential clients, those who are looking to buy their first home, and they are really afraid of looking at their credit score because, you know, they've made some financial mistakes in the past, and so they're really afraid to look at what their credit score is. What type of advice would you give for those who are in that position, who wants to buy a home but are afraid to take that initial step of looking at their credit?
Yeah, I say you start now. I have been there. I love to tell this story because people want something they can relate to, and I've been there. I've made credit mistakes in the past, and hence why I've gotten into this industry and love it. I love educating people on what they can do. If you're willing to put in the work, anything is possible, right? So you just have to be willing to put in the work to take the steps to better your credit. So it starts with pulling your credit. That's the most stressful part. And then once we go through it and I kind of advise you on your next steps, I don't do credit repair. I have people in place that can help you with that. But if it's something small, I can advise you on what we need to do to get you there, whether it's in 90 to 120 days or whether it takes a year. Sometimes it takes a year for people to get back on the right track, but it's better to start because that time's gonna pass anyways.
Right, absolutely. And you brought up a good point, just to start, because I've come across so many people who thought their credit was really bad, but it wasn't as bad as they thought they were, and they just had to make some minor adjustments or just change some things, or pay this debt off, and they were okay.
Yeah.
So now, do you have any tips for now you mentioned a credit repair company that you work with, so do you have any tips as far as those who are looking to improve their credit score?
Yeah, well, some quick tips are start saving and start paying down your debts. So if you have a bunch of credit cards that have high utilization, you want to pay them below 50% is usually what I advise people. Get those down. A credit repair company might say even more than that, but at least get it down below 50% utilization. And honestly, those are the biggest steps. Don't open any new trade lines if you're in the market to buy. Try not to get any new vehicles. Don't start a new job. Yeah. Nothing that's going to stop you from making your payments on time and getting that debt paid down.
Right. I actually did a video maybe like a month ago about how to improve your credit score. So if you want to see that video, please click on the link in the description box. So I have another question for you, Cerita.
Okay.
Now, I know there are so many down payment assistance programs or any other type of programs that can help future homeowners in purchasing their home. Explain a little bit how these programs work and what type of programs are available to potential homeowners.
So there are several, and there are probably too many to name. But when it comes to, basically, these programs are great. They allow the buyer to be assisted with their down payment and sometimes their closing costs. Just depends on the program. But it allows them to kind of get into a home with this assistance, basically, down payment assistance. They work a couple of ways, and I always like to let people know this. The first way that it works is they'll give you the down payment, and in one type of the program, it allows you to, they'll forgive it after 36 months of you making your payment on time, your mortgage payment on time. Okay, there's one that does that. The other one, it's a soft second or a hard second where you're actually making the second payment, which is that down payment that they gave you, that you're actually making that payment, and it doesn't go away unless you refinance, I believe, or sell the home.
Okay.
So it's kind of, you got to really read the fine print in those. Sometimes when I love down payment assistance, but sometimes I'll tell my clients, they may have the down payment already, but maybe they just need help with the closing costs. So I'll say, hey, if you have the down payment, a lot of times we can have the lender actually help you with your closing costs, and then you don't have to worry about paying that second back or anything like that. So sometimes people just don't know.
Right.
They're like, free is free, and it's not always free.
Exactly.
It's never free, actually. So there's always a caveat to it.
Yeah, so it really sounds like it comes down to knowing, like having that knowledge and being educated on the type of assistance programs that are available and how that program would affect your mortgage payment.
Yeah, it's really having a loan officer that's actually an advisor. That's why I call myself an advisor, because it's not just, I'm going to buy a house and this is the end. I really try to build relationships with my clients because as you know, this business is referral based.
Yes.
So you have to know what you're talking about when it comes to loans and real estate and everything that has to do with buying a home. It's the biggest purchase of your life.
Absolutely.
So you want somebody on your team. You want a team.
That's right.
You want a team.
Yeah, so speaking of team, Cerita helped one of my clients purchase, she was renting, and the landlord was going to sell, and she ended up qualifying to purchase the home, so she was a first-time homeowner. But I remember distinctly, I believe that this particular client was going for FHA originally, and then you did your magic, right, and did conventional. So what is the difference between an FHA loan and a conventional loan? Yeah,
so FHA is a government loan, and it requires 3.5% down, okay? It also has mortgage insurance for the life of the loan. And what mortgage insurance is anytime you're not putting 20% down, it's an insurance that protects the lender in case the homeowner defaults on the loan. So FHA, it's great, but it has mortgage insurance for the life of the loan. It also has upfront mortgage insurance that is rolled into your loan. So if you got a loan amount for $250, your upfront is going to be a little bit more than that, which the payment you'd see on the loan amount you would see on your paperwork. Conventional has anywhere from 3 to 5% down is the minimum down payment on that. 3% being if you are a first-time home buyer and haven't owned in the past 3 years is usually how that works. 5% is standard. That also has mortgage insurance. The difference between that is mortgage insurance can be automatically canceled once you have 78% equity in your house. You're at 78% loan to value with your house, so 22% equity in your home. It'll automatically be canceled.
Okay.
And those are basically the two big differences. People usually go for FHA. It's a little bit less stringent on the requirements. So FHA is a great loan for first-time home buyers to get into. But a lot of times people just don't know about conventional, and they can do that too. So what I like to do is compare apples to apples and put it down on paper. And it's really what is more comfortable for you, Mr. or Mrs. Client. You know, what is more comfortable for you?
Right. Now, you mentioned the insurance. Now, what type of down payment would eliminate that PMI, that insurance?
20% down.
Okay.
So if you have 20% down, say you're selling your house and you're, especially in this market right now, depending on when you're watching this, it's crazy.
Yeah.
So you probably have equity in your home. You can put 20% down and avoid the mortgage insurance.
Okay, awesome. That's good information to know. So speaking of this market, how crazy it is, I know it's starting to cool off a little bit, right? But there's still some buyers who are interested in purchasing a home. What do you recommend as far as how should they approach this market and they want to get a home? What should they do? What do you think?
Oh my goodness. So if I'm being honest, we're talking in 2021, if for anybody who's watching that, and Arizona is a hot spot. We are like the #1 market right now, right? For home values increasing and offers, and you know that. You probably look every day.
Yeah.
I tell people you have to have, depending on the program and everyone's situation is different, but if you have any extra assets, it's going to be huge for getting your offer accepted. For me, I like to call when somebody's placing an offer. I like to actually call the listing agent, introduce myself, and tell them things that I can actually disclose legally to the listing agent, which is huge. It kind of sets your offer apart. Most listing agents never get a call from the loan officer, and they don't know who they're working with. So just to let them know we're a team, they have open access to me and open lines of communication with my team as well. I just feel like you have to be willing to be patient too. Yes. I mean, that's like the biggest thing, and just know that your house is out there for you. It might just take some offers, diligence, and time.
Yeah. Well, they're projecting that it's going to cool off and that inventory will slowly increase. So like Cerita said, just be patient, and the house that's meant for you is out there.
Yeah,
at the end of the day.
That's what I believe.
So now I know, because the way that the market is with resales, that a lot of homeowners or future homeowners are taking the new construction route. Okay. So what differences are there for, if any, when applying for a mortgage for new construction versus a resale property?
So a lot of times with what I've noticed in my 10 years being and working in this industry is that new home builders offer bigger incentives if you use their in-house financing, in-house lender. So it's usually hard for me to compete with that. Okay. Because so I honestly will tell my client, go get all you can from the new build, and let's get back together when you're ready to refinance. Okay. I don't know. I've never worked in the new home build, but arena. But I know they offer great incentives, and sometimes that's just the route that people should go. But I believe that they offer all of the same programs that we have. And I'm a broker, a mortgage broker, so a little bit different. But yeah. I don't know everything, but I'm sure they do offer great incentives. Yeah,
and I know they do. I mean, from helping with the down payment or closing costs or free upgrades, things like that. So it comes down to just doing your research and finding out which route would be better for you, either going with the builder's lender, preferred lender, or finding your own lender, because sometimes the assistant programs that your own lender can find for you can be more beneficial for you. So it just sounds like really just doing
depends.
Doing research. Right.
It depends on the builder. Sometimes, especially right now, maybe they're not offering that many incentives.
Right.
So maybe it's best, compare apples to apples. I don't just go with what they're offering. Get your own outside lender and ask them to run a scenario or a quote and compare it, just like you would insurance or anything else.
Right, absolutely. So now, speaking of, we kind of been talking about mortgages this whole segment here.
Yeah.
When you have a mortgage payment, what really is included in that mortgage payment?
Okay, so two things. When you are applying for a loan and when I send out disclosures, you're gonna see a few things on your mortgage payment. You're gonna see the principal and interest, your taxes, the property taxes. Every house is different in Arizona, so each home has a different rate. You'll see your property taxes, you'll see your insurance. You get to choose your insurance, just like you would car insurance, you choose your homeowner's insurance. If you're not putting 20% down, you will see mortgage insurance payment in there. And then on our paperwork, legally, we have to put in, if you're in an HOA, if you're buying a property in an HOA, you'll see the HOA payment in there. Now, after the loan closes, okay, and you get your first mortgage payment from the lender, you will not see that HOA payment in there. Your HOA payment will, you'll either be billed separately from your HOA association. So that's all that's in it.
Pretty straightforward and simple.
Yeah, and the only other thing I can add is if you are doing like a second loan, like a HELOC or something, you'll see the second mortgage payment on there too.
Okay.
But that just depends.
Gotcha. That makes sense. Now, I know we talked about the two different type of mortgages for FHA, well, the main ones at least, FHA and conventional.
And VA. We
talk about
our
VA.
vets. We didn't talk about our vets.
So explain that a little bit for those who may not know what a VA is.
So the VA is phenomenal. If you've ever served in the military or you're a surviving spouse of a deceased vet, then you are able to take advantage of using the VA funding, which is a phenomenal program. A lot of times when you're purchasing, it's 100% loan, which is great.
Nice.
There is a VA funding fee, and that's all dependent on your certificate of eligibility, which we order through the VA benefit. But it's seriously an awesome program. I love helping vets. And allowing them to utilize that.
Nice. So it sounds like there's plenty of options for the different type of home buyers that are out there looking to get their first home or second home or whatever.
Yes,
right?
yes.
Yeah, awesome. So now there are different terms with mortgages, right? So we have a 15-year and a 30-year. So explain how that works and what do you recommend that a client or a potential client would, what type of term would they take on a mortgage?
Yeah, so honestly, you can name your term. It's not even 30 or 15. You could choose a 16-year, you could choose a 22-year, just depends on the lender. But what I ask a client is, what are your goals? If your goal is to pay off your home in X amount of years and you don't mind having a slightly larger payment than a 30-year, then let's look at, a lower term. If your goal is to keep your payment as low as possible, then the 30-year is probably going to be your best bet. There's even a 40-year,
which
is crazy. Yeah, I don't recommend it, but it's out there for people, depending on the loan program. So it's honestly dependent on what your goal is. What is your family goal? Everyone's different. Some people are like, I just want the lowest payment, and so a 30-year would probably be best.
Right, yeah. I know a few clients of mine that have actually done 30 and 15, and the difference between the two as far as their monthly mortgage payment has only been like $100 or a few $100s. So just like you said, it just really depends on their long-term goals and what you can afford at that moment. Right?
And I tell people, even if you went into a 15-year, it's not going to double your payment. Like, that's the big misconception.
Right.
It's not going to double your payment. It is going to increase it, but it's not going to double it. Okay. So it's just all dependent on what you want.
Good to know.
Yeah.
Well, thank you so much, though. Now, before we go, tell everyone how they can get a hold of you.
Okay, so you can either email me. I'm at cerita@radiantfg.com. We'll also leave my information below. So all my contact information will be below. And if you ever have any questions, mortgage related, please don't hesitate to reach out.
Awesome. Yeah, we will be sure to put her contact information in the description box below. Also, if you are looking to sell, please check out my free digital book, Seller Mistakes That You Don't Want to Miss. Okay, I give you some strategies that affluent home sellers use that you can implement to get top dollar for your house. I'm Renee the Realtor. Thank you so much for watching, and we'll see you next week.
Bye.